Good morning, everyone, and welcome to our webinar. This is Courtney, the Marketing Coordinator here at AIM. Today's webinar will be recorded and later posted on our website. This does mean that all attendees will be automatically muted so that we can get a quality recording. If you have any questions, feel free to type them into the chat box and we'll try to answer them throughout the presentation. But if we're unable to get to all the questions, we'll have a member of our marketing team reach out to you individually to get those answered for you. We do have webinars every Wednesday morning, except for next week. We're going to have a little break since it's the holiday week. We'll still be in the office to answer any questions if you give us a call, but we are taking a break from a webinar for next week. So with this, I'm going to go ahead and hand it over to Don so that we can get started. Go ahead and take it away, Don.
Thank you, Courtney. Good morning, everyone. Happy holidays. 'Tis the season. We all know that. Getting ready for Christmas. Today, Don Erickson here with AIM. Today, we have a very special guest again with us, Nate Self with GILICO. Nate's going to go over with us today GILICO's index annuities and also some of their strong minimum guarantees, among other things. Nate, good morning. How are you today?
I'm good. How are you, man?
Doing well. Trying to get ready for the Christmas season as the last minute things happen, as we all know.
Yeah, it's hard to believe that this weekend is already Christmas Eve, and 2024 is 10 days away. It's been a very fast year, but a successful one across the industry. So I'm glad that you all are joining us this morning to kind of learn about what's coming in 2024.
Yeah, this is like you just said. This year has been just flown by. It's just been so fast, but been a great year for us as always, helping all the agents and growing business. And with annuities, we want to grow a lot more next year, and I think it's perfect timing to kind of go through this. So
absolutely, yeah, they're very attractive, and they will continue to get even more attractive. There's fierce competition amongst carriers, and it's being looked at as a new asset class in a portfolio. And many advisors who haven't looked at annuities in the past are starting to look at them for all the risks that they take off the table for their clients. So I'm excited to be in part of GILICO, one of the fastest growing carriers in the country. And I think you'll really like to see what we're coming out with next year. So with that, I'll jump into it, Don, if that's okay.
Perfect. Sounds good. Let's do this thing.
All right. So for those of you who are not familiar with who Guarantee Income Life is, we were founded all the way back in 1926, and we were a family-run business for nearly a century until we were acquired in 2016 by our parent company, Kuvare. And Kuvare is really what's driving the growth of GILICO. In 2016, we were doing $45 million of premium, so we were extremely small, focused only on fixed annuities as well as asset-based long-term care. Fast forward to this year, we're gonna surpass $2.5 billion in sales. Most of that being index annuities, which we didn't even have when we were acquired in 2016. I'm located in Des Moines. Our main office is down in Baton Rouge, Louisiana, and we're really focused on delivering value-oriented retirement solutions to the middle market consumer with a commitment to a long-term and sustainable growth strategy. So that's who we're going after, is the middle market client, not the ultra high net worth, the client that just needs a little bit extra push to make sure that they're secure in their retirement. A couple other firms that you may know underneath the Kuvare umbrella, United Life. They're located in Cedar Rapids, so there are our life and our distribution for our banks and our financial institutions. And then we also have Lincoln Benefit Life as part of the Kuvare family of companies. That's a $20 billion block. Again, Lincoln Benefit Life. That's really differentiated our product portfolio. It's variable life products. We need to get into the variable space. We have an arm to do that. Ultimately, Kuvare has $33 billion in total assets, and they have all the capital needed to grow each of our individual businesses under Kuvare in unison to serve our purpose of helping the middle market consumer with retirement. As far as our ratings go, we are A-, and we have been A- since October of last year. We have a stable outlook. We've had 16 consecutive quarters of premium growth as well as asset growth. and we're approved in 46 states in the United States. The only 4 we're not approved in quite yet are Maine, New York, Alaska, and Hawaii. With that said, we do have cross-border sales available across all of our products. So if you have a client that lives in, say, New York, and you're located in New Jersey, as long as there's a reason for that client to cross over the border and do business with you in New Jersey, we are one of the only carriers that are friendly in that regard. If you have questions on that, reach out to Don or myself, and we'll be happy to help you with that cross-border sale opportunity. When GILICO launched our index annuities, and that's going to be our main focus today, we wanted to launch something that was unique in the industry, not because it had so many bells and whistles, but because it had so few. And ultimately what that would be is a conversation that will get you more yeses than nos when you're meeting with the end client. So you won't see a roll-up rate on our index annuity. You won't see charges over 1% for income riders. You'll have 10% free withdrawals right up front. Strong renewal rate history. We've had perfect renewal rates, in fact, since we launched the Wealth Choice product. So it's a very streamlined index annuity it's designed for the client in mind. Now, let's go through some of the details of the Wealth Choice. This is our flagship national product. It comes in a 5, a 7, a 10, and a 10 with premium bonus version. Something unique about it is you can write it through the age of 90 for straight accumulation and through the age of 80 if you want an income rider or if you want the bonus. You can access free withdrawals immediately. You have a 10% enhancement death benefit feature built into the product at no fee, and all you simply need to do is, if the client's wanting to use the index annuity as a legacy play, they can elect the payout for a 5-year or more period certain, and that beneficiary will get a death benefit enhancement free of charge at 110% of that account value if they were to pass away. It's a nice built-in feature. And then the income rider, it's for clients through the age of 80, and we do not reduce for joint income. It's available on the 7 and 10-year options. As far as our index allocation strategies go, we have very simple strategies. No premium banding, 3 S&P strategies, one on annual par, a monthly cap, and then our most popular, our annual point-to-point. You have a strong fixed rate, as well as a strong minimum renewal rate that I'll talk about here in a minute. An Ascend index is a great tool to diversify with 8 different ETFs that's controlled on a 5% volatility target. Our rates have held steady since May 1st, and we will hold them steady in January. This has been a really good story for our top producers, not having to know about rate changes and rate holds. They've had a consistent story that they know what the rate has been since May 1st. And that is continuing to be the same next year, where we see our competition starting to lower rates. Most popular strategy, you got a fixed rate at the bottom there, 5.25%, 5.25%. That 5.25% is the same fixed rate on the 5-year, the 7-year, the 10-year, and the 10-year with the bonus. So regardless of what product you select or the amount of premium, the client has an optional fixed rate at 5.25 on an index annuity, which is very strong. Just make it easy on everybody to have the same rate. The other popular strategy is the point-to-point cap. That ranges from 10.75% on our bonus version to 12% on our non-bonus 10-year. You'll have 11% on our 5-year, and that's on our 7-year, 11.5%. We've been top decile all year long in S&P cap strategies, and it's been a really good strategy for clients as equity markets have bounced back from 2022 here in the United States. So when you think GILICO, think of leading S&P 500 caps, think of strong renewal rate history, think of a strong fixed rate. So if any of those three things come up in your conversations, they want S&P exposure, they want a fixed rate, or they want strong renewal history, you can think GILICO. Now, one thing that is overlooked that I wanted to make sure that we talked about today, Don, is the minimum renewal rate. Our minimum renewal rate is 2.65%. That's the minimum the fixed account on any of our Wealth Choice products can renew at, and that's for the life of the contract. So year one, you're going to get 5.25. Year two, worst case scenario, it renews at 2.65, but that's forever. Now, why is 2.65 important? That doesn't seem like that great of a rate. But if you take a look here on the screen, I have 1 year treasuries mapped out. And you'll see the graph there. In 2007, it was just over 5%. But for 14 years up until 2022, that 1 year treasury was below that 2.65 or 2.75 illustrated here. We should see an increase in this minimum next year. But that eliminates short-term duration risk, right? Because if you're in a short-term product, like say a 3 or 5 year MYGA, at the end of 3 or 5 years, what are you going to have to do? You're going to have to go reinvest those assets and potentially could be at a lower yield. Whereas here, you have an index annuity where the minimum guarantee is 2.65%. It will be 2.65% for the life of the contract. So as long as the client has it in force, that will be locked in for the life of the contract.
For the life of the contract, yeah. So when you're looking at the 525, that's for that first year, for that fixed rate, for that first year. Yeah, that's kind of what I was getting some questions about. So how does it work? How's it work? It's like the same question over and over. So it's like, yeah, so how you put it together, the 2.65 is for that life of the contract. If it's 5, 7, 10, right? Correct?
Yep. Or the bonus version too. Yeah, that fixed account's 265.
Okay. Yeah.
Yep. So it's a good hedge against short-term duration interest rate risk and reinvestment risk, right? Because it is locked in. You know what the minimum is going to be, and that minimum is forever. So it's a really powerful tool in a retirement plan strategy. And we will have this piece that I have on the screen out on our website, and it is client approved. So if you do like it and you like the strategy of the minimums, feel free to go out on our GILICO pre-sale website, and you can pull it down from there here in just a couple weeks. Now, the other thing you can show a client is an illustration, right? So here I have the 10-year with the 5% bonus. I also have the 5.25 fixed rate. So you get 5.25 year one. You also get 5% in year. So in year one, your 100,000 is worth 110,513. So a 10.51% return guaranteed in the first year. Now, what if it hits the minimum of 2.65% in year two? It renews at the minimum. Your year-end two balance will still be 113,441. That's over a 6.5% annualized return on an index annuity guaranteed for 2 years. That's better than any MYGA you can get right now. And frankly, you're locking that minimum guarantee in for the life of the contract, which you can't do with a MYGA. So this is a very powerful story that's being overlooked. And it hasn't been this attractive because of how high interest rates are until this year. So this is starting to gain a lot of traction, the bonus, the fixed rate, and then the minimum. And then obviously you have the ability each and every year to look and reallocate to the S&P 500 strategies shall you want, and the client has a 30-day window to do that. Now, you may get questions on, yeah, that sounds great. I want the minimum guarantees. I want the high return in the first year. But what about the renewal history on the index if I want to reallocate? Well, here at Guarantee Income Life, we have perfect renewal history. We've utilized a levelized option budget. So what that means is we spend the same amount on call options to hedge our strategies year one versus year 10, for example, on our 10-year product. And that just leads to a higher likelihood of us having good renewal history. So we do on our index strategies have 100% renewal history. That fixed account at 5.25%, Don, I would expect that to come down in after the first year. But just know that you have that minimum guarantee at 265. Shall it come down?
Right. Do you still think it's going to be over the 5, or just probably not sure from right now? It's 5.25, may go to 5.15. You got to wait and see. Probably.
You mean in year 2?
Yeah.
Yeah, it's really hard to tell. So the way that's invested is, we use shorter duration securities to back those guarantees, and it depends on where those interest rates are the subsequent years. I would expect it to come down, and the reason I expect it to come down is it's higher than our MIGA rates, and we pay higher commissions. So all things being equal, it should come down, right? I just don't know to what level. All I know is that the minimum it could come down to is 2.65. So it should be somewhere in between there, the 265 and the 525.
Well, yeah. So the time is now, really, if you're going to do it. I mean, the 5.25, don't miss out on the first year.
Yep. And then the cap rate on the bonus product that I just illustrated is 10.75. So that has also been a perfect renewal history, and that's the highest cap rate in the industry on a non-fee bonus product. So if you're looking for a bonus product with a high S&P cap, that's Guarantee Income Life. We also do have an income rider. So if your clients are looking for high guarantees for income, it is available. No reduction for joint, 75 basis points for the fee. It's pretty low compared to the industry. And the way our income works is it's just 10% of the client's age. So say you have $100,000, you got a 65-year-old, the payout factor is going to be 10% of the client's age at 65, so 6.5% of $100,000, be $6,500 for life. They're very easy to explain to the client, no confusing roll-ups, payout factors, so on. We just want to make sure that it's very clear to the client so that you get more yeses than nos in your conversations. Now, where are we seeing the most flows in 2023, and where do I see the most flows coming in 2024? It's from other annuities, to be honest. People are upgrading their contracts because of the higher guarantees and new money rates than ever before, because of how fast interest rates have risen here in 2023. So if you have a book of annuities and you haven't gone through it yet to look to see which clients would benefit from looking for another opportunity, you need to do it before rates come down. Now, what are our guidelines for exchange business from other annuity contracts? Our 10-year with the bonus will accept up to an 8% surrender charge if you use that bonus, so a net 3% loss, as long as the client has $50,000 liquid for emergencies and is 2 years old. Now, if you're not going to use the bonus version, which the majority of people who are doing business with us in this realm are doing, we'll accept up to a 5% surrender charge. All the other rules remain the same. So remember, 8% on the 10-year with bonus, 5% on the non-bonus. Now, why would you want to do business with GILICO for replacements? There are other carriers that have higher bonuses. Number one, we don't have any fees on our bonus product. A lot of the time, if you're working on a bigger bonus product, 14, 15, 18% bonus, you're going to be paying a fee each and every year. We don't have a fee. There's no recapture of the bonus if they're just taking out free withdrawals. It's a true cash bonus. So that 5% is immediately into the account value, and the client starts to earn compound interest on that. We've got perfect renewal history, even on our bonus product. And we do have a commission incentive for you to go through your book of business and help clients upgrade their contracts with these great rates and minimum guarantees. Here's our bonus program for 2023. It's paid quarterly to you, retro to day one, $1 million, $2 million, $3 million. We'll pay you 0.5% all your production at $1 million, regardless of the client's age. At $2 million, 75 basis points, and at $3 million, a full 1%. This is the lowest bonus program in the industry to hit at $1 million. check of $5,000 coming to you from GILICO shall you hit $1 million. Now, this is our 2023 program. We will have something very similar, if not the same, next year. So don't worry if you don't hit it this year. There's an opportunity for you to take advantage of it next year. We will have a program for you next year. So with that, Don, I will open it up for questions, and we can jump back to any of the slides that we have questions on.
Yeah, it was more of the questions. So the bonus thing, I mean, $1 million in annuities really isn't that much when you start bouncing annuities in, that's for sure. I mean, you can easily hit those numbers very quickly.
Especially if you're right now, your book of business, you know, and helping clients get higher guarantees and new money rates when the opportunity is right. It's not hard.
Exactly. Yeah, that was a big question that just kind of popped up. So you're going to get that, and you just never know when it's going to come up. But there's a lot of annuity money out there. That's money just sitting there that people can get a lot of interest right now with it, just for a year, and then the guaranteed 2.65. Those are really the questions I had, other than knowing the guarantee. So that one slide where you showed the 5.25, somebody was asking, you know, that 10.5%. And that's for the market piece, correct? To go over that again real quick.
Yeah, so here we go. So here you have 100,000 going in. You're going to get a 5% bonus. You're going to get a 5 1/4 fixed account. This is the guaranteed page of our illustration. So guaranteed at the end of the first year, your account value will be $110,513, which equates to a 10.51% return. And then in year 2, on a guaranteed basis, worst case scenario, it's going to renew at 2.65%. You'll earn 2.65% on this value, which is $113,441. So in 2 years, you'll get 13.44% return, which equates to like just over 6.5%, right?
Yeah, exactly. Yeah, really, there's not any other questions. That was really what they were looking for, was the guarantees that they were going to get. But I mean, all this is great information, I think. But like you said, now is the time to do it. People have money they want to, you know, put somewhere where they can get some guaranteed money, especially how the market was down for, you said, so many years, and to get that guaranteed at 2.65 even.
Yeah,
you can't beat that.
Yeah, let me pull that piece up. This we just came out with this morning, so you'll see this out on our pre-sale site here shortly. But this is a pretty powerful piece that talks about locking in the higher minimum guarantees now compared to history, just on a 1-year treasury look back.
Yeah, that's crazy. And to get a 2.65 with you guys, that's
and it's for life.
Yeah, exactly, for the life of the product. So yeah, I don't see any other sorry, got itch in my throat. No other questions, but the biggest thing, if anyone has questions, we're here to help you. I can get a hold of Nate anytime. He can help us if we have an issue or you have another question about their products. He's always there to help us, and very much appreciate your time, Nate.
Absolutely.
Wishing everybody happy holidays, that's for sure.
Yeah, we'll give everyone 5 minutes back to do some online Christmas shopping, and happy holidays and Merry Christmas to everybody.
Exactly. Have a great day, Nate, and we'll be in touch soon.
Yep. Take care, everybody.
All right. Thanks.